Welcome back to Yahoo Finance Live. After more than a year of social distancing, Americans are back to going out and spending. According to a new survey from LendingTree, 45% of consumers have admitted to spending more than they can afford on celebratory gifts coming out of the pandemic. Here to discuss this and more on the state of the consumer is Matt Schulz, Chief Credit Analyst at LendingTree. And Matt, that's a pretty staggering statistic that nearly half of consumers are spending beyond their means on gifts. What kinds of things are people actually spending on?
Well, they're spending on all kinds of things, whether we're talking about travel or dining or any real kind of gift that people would get. And the trouble is that we're all so eager to start spending. We're all so eager to get things back to normal that a lot of us feel pressure to kind of blow things out a little bit when we do have something that feels normal, like a birthday or a holiday. What you don't want to do is spend yourself into future debt when you're celebrating a little bit of return to normalcy.
So when we talk about normalcy, I mean, 57% of parents with kids under 18 said that they felt pressured to make their kids' first post-pandemic birthday extra special. But I would imagine without a pandemic, that number would have been high because lots of parents want to make their child's birthday experience special. Is this really any different than in the past?
Yeah, to be perfectly honest, I was a little surprised that number was low. As the dad of a teenager myself, I know that there's a lot of pressure to make those sorts of things special. But the truth is that we have seen a lot of talk and heard a lot of people say that they do want to make up for lost time from the pandemic. We saw it going all the way back to things like Halloween last year, where people decided that they were going to blow it out a little bit more because the rest of the year had been so crummy and they wanted to make it up to their kid. So even though I do think these numbers are actually a little low, I don't think there's any question that there are folks out there who are wanting to blow it out a little bit in order to kind of celebrate going back to normal.
Matt, do we have any indication of when some of these spending trends might come back down to more normal pre-pandemic kinds of levels?
Yeah, that's really hard to say. There's so many variables that are still out there that are impacting debt levels, delinquencies, and just spending in general. I do think that there's a lot of feeling that once September comes around, Labor Day passes, and schools reopen, childcare is more available, that I do think things are going to feel a lot more back to normal, and that may be a time when things kind of ramp up spending-wise. But then you factor in the fact that child tax credits are going to come and other things like that that are kind of X factors in this. So it's a really hard thing to know.
Matt, is there a disconnect between the survey's results and what we saw in the G19, basically the Federal Reserve's monthly picture of what's going on with consumers? Because we saw that Americans are paying down debt, or have been, at a really remarkable pace. Is that about to get blown up?
Yeah, it is. And the fact is that we're a country of spenders, we're a country of consumers, and the only time in the history of credit cards, really, that we haven't had hockey stick growth with debt have been during the pandemic and during the Great Recession. So that sort of growth and that state of debt, at least when it comes to credit cards, is just kind of the state of things. It's the state of normalcy. And I don't think there's any reason to expect that, at least in the long run, we won't see a return to that. It may take a little while because of some of the lingering effect of the stimulus that's still out there and to come, but I'm pretty sure that it's going to come.
And Matt, we just got a print on consumer price inflation out this morning, showing that the broadest measure of consumer prices was up by the most since 2008. Are we getting any indication that these increases are impacting consumers' propensity to spend on some of these discretionary items?
Not that I've seen yet, but I do think that the numbers will be interesting to watch going forward, because really what that does is it shrinks the duration that all of that extra cash that people had from the stimulus, from reduced spending during lockdown. It basically reduces the impact of that window and will make people go from being a cash positive situation to maybe a debt situation a little bit faster. So that's not a situation that any of us want, but it's definitely a situation that bears watching going forward.
Absolutely, and something we will be watching closely. But thank you so much, Matt Schulz, Chief Credit Analyst at LendingTree.